In the world of finance, few things are more seductive than steady, predictable income. And for years, James Courtier sold just that, until it all went catastrophically wrong. Today, we're diving into the true story of OptionSellers.com, the infamous firm who bet big on calm markets and lost everything. OptionSellers.com was an investment firm that operated up until 2018 and managed approximately 290 accounts worth around $150 million. At its core, an option is a contract. It gives the buyer the right, but not the obligation, to buy or sell an underlying asset at a specific price by a certain date. That's the strategy James Courtier used in his firm, and at first it worked beautifully. However, not all option strategies are created equal. Let's talk about the critical difference between covered calls and naked options. Covered calls are the safer play when using options. You already own the stock, and you're just selling a call option on it. If the stock ends up getting called away, no problem. You deliver what you already have. Downside is limited here. Naked options are a different beast. You're selling a call or put without owning the underlying asset, and without having any protection. This means your losses can be unlimited. If the market moves against you, you're exposed with nothing to cover you. That was the strategy at OptionSellers.com. Naked options on volatile commodities like natural gas. OptionSellers.com sold naked puts and calls on commodities, primarily natural gas and crude oil. They used leverage as well as deep, out-of-the-money positions that paid consistent income month after month to clients of the firm. But under the surface, this strategy carried enormous risk, and because it was leveraged, even a small spike in prices could be catastrophic. And then, it happened. In November 2018, natural gas prices spiked over 70% in less than 1 week, going from $2.80 to $4.80 in one of the largest short-term moves in years. The naked call positions held by the firm were completely obliterated. With leverage amplifying the losses, clients saw their entire accounts get immediately wiped out. Some even ended up owing money to the clearing firm, on top of losing their investments. Courtier released an emotional video after the incident, apologizing and calling it a rogue wave. But critics said it wasn't rogue, it was reckless. So what can we learn from this? OptionSellers.com downfall wasn't just a one-off mistake, it was a masterclass in what not to do with options. Key lessons here are obvious. Naked options can carry unlimited risk. Leverage magnifies everything, including profits and losses. Volatile asset classes like natural gas can be unpredictable. Risk management isn't optional when managing a portfolio. It's survival. So, are naked options actually worth it? Or are they just a time bomb waiting to explode? Personally, I would never hold any investment that utilized a naked options strategy. Would you? If you found this breakdown helpful, give it a like, hit subscribe, and stay tuned for more stories from the world of finance.